we've been saying this for a while, that every one of your CaseWare files should include 3 documents. These are automatic CaseWare documents. You can see it here, the map trial balance. So this is a trial balance by map number, your draft balance sheet by map number, and your income statement by map number. Those 3 documents will make sure that you have mapped your accounts properly. You're going to make sure your balance sheet balances, the retained earnings for prior, ties into the opening, net income is correct based on all the accounts that are set with the I type before we look at financial statements. Once that's right, we can be a lot more confident about what's going to happen in the Jazzit statements. And if there is an issue with the Jazzit statements, we have a printout of these draft statements so we can see where it is different. Now, I'm going to focus today on this one here, 1.2, the draft balance sheet by map number. And what I want to show you here is that if we look at that statement, you're going to have a column here for current, one for prior, and what we're interested in today is the variance column, okay? So these amounts in the variance column, a lot of them are going to tie into what we see in the current year for the cash flow. For example, accounts payable, the difference between the 2 years, 1,017,000 shows up in our statement of cash flow. So it's useful to be able to do that. Now, the challenge with this document is that it's only showing us the current and prior year and the variance. And we were actually just looking at our working papers today, and we said, you know, we actually have a working paper here, 10.3, and I'm just going to open that up down at the bottom here under income statement folder, 10.3 account analysis. Now, in this document, what I've done, first of all, is I've set my threshold here to 0 and my percent to 0. By doing that, what it does is it gives me the totals on the bottom. So as soon as we have thresholds, it stops totaling because some accounts have been filtered out. These totals are not meaningful. But if I put it at 0, then I'm going to get the totals at the bottom. In the columns, what I've said is I want the current year and the prior year and the prior year 2 balances in here. And you can see I've just basically set it to those periods. And I don't need a percent change, but I want to have a dollar change. Now, when I do a print preview, this is a really nice document because what it's giving me here is the current year's cash. It's giving me the change between the current and the prior year right here. And it's giving me the change between the current year, or sorry, the prior year and the prior year 2 right here. So here's your current year cash flow basically, and there's your prior year. Now, of course, things like property, plant, and equipment and marketable securities, we're going to have other things going on like gain and loss and, you know, sale of marketable securities. So it's not giving us everything, but it is giving us a lot to look at in terms of if we have to try to narrow down what's going on in the cash flow. Now, the other thing I want to say here is that when we're doing the cash flow, the more Jazzit working papers you use, the more automatic the statement of cash flow is, okay? So if you're using property, plant, equipment, callable debt, you know, loans receivable and payable, those numbers are transferring to your cash flow automatically rather than us having to work those numbers out manually.